Alright, welcome back again to Igbo Forest. Please, if this is your first time of coming across my video or watching my video, please I want you to do me a favor, like and subscribe and turn up the notification. Please, you can drop your comment and help improve the support the channel. So without wasting much of our time, I want to briefly share with you what I'm currently looking at and basically my strategy as a whole. So I want to share with you how I analyze the market, what I really look for, and what's most important to me. So how do I really carry out my analysis? This is basically my strategy. So how do I carry out my analysis? The first thing I want to do in the market when I open the chart is, first of all, I want to go to the higher time frame. My approach is from top down approach. The way I approach the market from the higher time frame. I gradually scale down to the lower time frame to get a clear picture of what exactly the market is doing. So in this video, I want to share with you my overall approach to the market, how I view the market, regardless of the pair I'm looking at. So now what we have currently now is not, forget about the pair, but currently we are looking at Great British Pound against Australia dollar. So it still can be used in different pairs. So what I want to do here, the first thing I want to do here, I want to come to the higher time frame. So in this video, like most of my video, my higher time frame is the weekly. I want to start my analysis from the weekly. Now, this is very important. I want you to know this. Now, every time frame has its own structure. Now, once I'm analyzing my market, I come to the higher time frame to figure out the direction that the market is going. What the current direction of the trend, like the overall direction of the market. So I come to the higher time frame to get a clear picture. And once you come to the weekly, here on the weekly, I want to first of all figure out the exact direction, the strength of the market is usually pushing to. Now, from the look of this, what we can see here is we had a bearish structure. So the current direction of the market is bearish. So what I'm looking at for is looking for opportunity to sell. So in this market, I already know that this market is pushing down. So what I should be doing, or what I should be working out for, is bearish. It all depends. Now, I already figured, I said the overall direction from the weekly time frame is bearish. Now, the next thing is, first of all, I need to understand the structure. It's not all about knowing the direction from the weekly time frame. Now, is the structure that will tell me the current direction that the market is, or is it either now? What I say is a structure that will tell me the current direction. The market can be the structure of this bearish move, can either the structure of the bearish move, either in a downward or in an upward, can be in a impulsive phase or in a correction phase. Are you getting it? So we need to first of all clearly understand the current structure of the weekly time frame. What is the structure telling us from the weekly time frame? Once we be able to figure out that the market overall, the market is trending to the downside. Now, I've already had few markup already. So as we gradually scale down, as we push further, as we progress, I'll explain why I have those points there. So what we can see here is from the, I think, from the weekly time frame, let's see the structure of the weekly. So you need to clearly understand. Now, the structure of every time structure varies from time frame to time frame. So you need to understand what structure, where you are in the structure, in the time frame that you're looking at, the structure that you're currently looking at. So what we have from the weekly time frame here, we have this is a high, we have a low, we had an high, we had a low, we had a high, we had this low here, we had this high, we had this low, we had this high. Please bear with me. We had this low, we had this high, we had this low here. Now, what I want to emphasize here is this. Now, what I want to emphasize here on the structure here is, now, as I said earlier, I said structure varies from time frame to time frame. Now, the structure that we had there might quite different from the structure that we're looking at from the daily time frame, from the 1 hour or 4 hour. But what's most important here is the swing point. Now, Now, already, once we understand structure, we know the impulsive leg and the correction. Now, the overall structure of this market and the overall structure of this market is bearish. Right from here, we can know that this is from the top. So we can know that high, low, and the market is creating sequence of break of structure to the downside. Now, what we had here is we had a push. There is high, we had this high, we had this low. Now, in a situation, market can be overall flow of the market of the weekly time frame can be in a bearish, but it can be in a phase, a current direction, like it can be in a correctional phase. So once in that phase of pushing up or like retracing from the weekly, if the weekly time frame, the weekly structure is retracing, that's like more like the overall flow is same, but market has not corrected itself. So what's most important here is what I want to emphasize here is now what we are the market is already in a bearish move. Now the current phase of the market, like we have a impulsive move. Now the positive move is already pointing to the downside. Get that? Now also what I still want to emphasize here is now this is higher time frame. This is the higher time frame. Now what we don't do, we don't take trade, we don't place trade here on the higher time frame, on the weekly or on the monthly. What we do, you want to clearly get the direction of the market. Now listen to what I'm trying to emphasize here. Now within this structure, now if despite the market is pushing to the downside, there can be a phase when the weekly structure be on a correctional mode, that which is pushing against the trend. Now in this state, now since you're on the higher time frame, you need to be very careful when the market is pushing, when the weekly structure, when the weekly time frame is retracing. Now, it might look minute in the weekly time frame, but from the daily perspective or in the lower time frame, this can be a full trend from the. So you need to clearly understand how the market is really flowing. Now, what I want to emphasize here now, first thing you need to know is you can only like emphasis here. Now, it is more like it's more easier to trade when the daily, which is the weekly here, have correct with the weekly have correct itself, which is as reversed from the retracement, as already in line, which is the impulsive leg. We have already complete the what's it called, the correctional phase, and the market is already impulsive move already kicked in aligning with the current trend structure of the market, which is the current trend of the market. So it's more easier to place it since the market has already corrected itself from the correction phase. Now it's already pushing in line with the structure. So in this phase, you can go down to the lower time frame to closely examine what is currently happening. How this positive leg is really flowing. Are we together? Now the weekly structure is bearish. Now we are not in a correction phase, we are in a positive phase. So which is more easier to trade when the market weekly is in correction phase, which is pushing against the overall trend. I believe, understand that as time was to progress further, I will still lay more emphasis on this. So that's what I want you to understand when it comes to the higher time frame, like trying to understand the market from that's what we want to do. So first of all, I want to get a clear picture of what this current state of the market, what the market is really doing from the weekly time frame. So the next thing I want to do, I want to scale down to the daily time frame. Now remember, once you come to the daily time frame, the daily time frame is where I really want to look at for my swing, like my structural levels. Now mind you, this is from the weekly structure, and this is where we mapped at, which is you can see like the weekly break of structure. But once you come to the daily time frame, the structure might change a bit, or you can see the clear push of the market. Now what we had here is the market become like we had this low, which is still maintaining the high, low, high, low, high, low, high, low, high, low. Ah, now what you can see here, the weekly structure. Now, daily structure is the weekly structure. When we scale from the weekly to the daily, the structure is still the swing point are still maintained. So you can still see a clean market structure, which is more broader here, which we have high, low, which is still giving us that the market is still pushing to the downside. Now, as I've said earlier, we don't trade the weekly structure. Are you getting it? We don't trade the weekly structural point. This is swing high, swing low, lower high, lower low, lower low, sorry, lower high, lower low, lower high, lower high, lower high, lower high. Now this structural point, these are weekly structural point. Okay, so now most of the time, if you are trading, we don't trade the weekly structural point. Probably you can have an aggressive push, where you can have an opportunity to trade the weekly structural point. Most of the time, my focus is not the weekly structural point. But what we want to do here is, once we had, now, as I've said here, from the weekly time, what we saw was, hold on. This was a weekly structural point which is already aligning with the overall weekly trend, which is, this was the correction, and we have this reversal at this point, which from the weekly, which is aligning with the weekly structure of the market. Now what I want to do here is, once we scale down to the daily time frame, what I want to do here is I want to focus on the daily market structure. Like I said, in every time frame structure of it. Now within this impulsive move, we can see structures, how the market is flowing in structure. Now this impulsive move will not move linearly, it flow in structure. Okay, so our focus will be, because this, and this should be at, from the weekly time frame, this is the reversal point. Maybe probably are trading from the weekly time frame, you can see that you can catch the reversal from here. It's more like holding the trade from the weekly time frame. Now if the weekly correct itself, which is aligning with the overall trend of the market, now this is where we'll, as a day trader or maybe probably a swing, can be looking for opportunity to catch the market entry from here, aligning with the trend. Now this is already, now the overall trend is bearish. Now this is already taking a bearish trend. So this is a bearish market. From this swing high to this point, it's a bearish market. I hope we are together. So the next thing we want to do here is, we want to focus on, our focus will be on this current impulsive leg. I hope we are together. Now, the next one to focus, since this is the impulsive leg, our focus is on now. We want to look at this. Is there any structure? Is this impulsive leg building structure to the downside? Now, we don't place trade on the weekly time frame because it takes longer. Even though you place trade, it takes longer time for the market to play out. If you are going for opportunity of, let me probably holding your trade for a week or probably 2 weeks or probably days, you want to place, you want to look for the weekly structure. We want to focus, our focus will be on the weekly structure. Are we together? Our focus will be on the weekly structure, sorry, on the daily structure, please. Our focus will be on the daily structure. So how is the daily structure really building down? Now, as I said earlier, structure varies across time frame. So what you can see here, we have this high here, we have this low, we have this high. You can take it down here, we have this low, we have this high. Hold on. Which is, all the idea is, this is a daily structural high. One that follow is our second daily structural high. altogether. So our trading will based on the daily structure. Now we had a break of structure right about here. We had this break here. We have another break. Now the structure might not be as neat as you expected, but what we had here, we had a daily structure. So what do we expect now? This is impulsive leg of the weekly time frame, but also we are within this weekly time frame, we are looking at the structure, the daily structure, how this weekly impulsive leg build the daily structure, how the daily structure is being built. So what we want to do here for clarity, since we have already mapped, and what I'm going to focus on is the daily trading range. Much like we have this high, we have this lower high, we have this lower high. This lower high lead to the break of structure, this low, which break this structure to create this low. Hold on. So what we have here is this become our daily trading range. This low, this lower high to this low. Now once we add a structure, we have starting from here, we have this point here. Price push from here. We have this low, high, low, high, low. Now once we add a structure, like what do we expect? Once the market build a structure, like what do we expect after? Now our focus is on the daily structure. We want to take our trading range from the daily. So what we had here, we had a low, a high, a low, a high, a low. Now what we expect again, we expect the market to push up a bit. That's a temporary push. That's a correction from the daily structure. Now, mind you, the weekly structure, the weekly is already, this is an impulsive push of the weekly, which is now is the lower time frame structure that build up gradually to create the weekly structure. Now we are already in an impulsive wave of the weekly structure. Now this is a daily structure within the weekly structure altogether. So now what we had here, we also had a high. What do we expect? We expect a price to push up a bit. I don't really know, as scale down gradually as we progress. I will explain why. Now we expect the market to push up a bit, make a correction and drop to signal a continuation of bearish move. As long as the weekly time frame is still on a bearish move, I have not taken correction to push up, which is we are still on the impulsive leg. So now the next thing we have to do here, I said, now the essence of coming to the daily time frame to wait for this is where we place our trade. And once we had a high, a low, what we expect? We expect a retracement. Within retracement as a correction, we place it. Now if you are waiting for a correction, now this is daily correction. Now if you are looking for this correction from the weekly, it's going to take you a longer time to complete. This will take you longer if you are looking for the weekly correction now. If you are looking for the weekly correction now, meaning you wait for this whole impulsive leg. You wait for this whole impulsive leg to drop to satisfaction before reverse, as it's about to reverse, like retrace before retrace, push up, make a correction for a tick. Now we can't wait for that long period of time. The weekly will give us direction. Now, so what we want to do, we want to focus on this impulsive move. Within impulsive, we have daily structure. So we want to focus on the daily correctional move to take trade. So the next thing we want to do is, where are we placing our trade from? Are we together? Where are we going to be taking our trade from? Once we had an impulsive, once we had a correction, what do we expect? A reverse and a trade. So the next level we need to focus on is our, since it's a downtrend, what will we focus on here is our supply level altogether. what do we focus? Our focus will be on our supply level. If it's an uptrend, our focus will be on the demand level. Let me come again. So we had this. Hold on. Okay. We had this low. We had this high. We had this low. We had this high. We had this low. So what do we expect again? We expect the market to push. And this is our daily trading. Now we don't expect price to push above this place. We want to push above this place. And this is also giving us a signal that the market is coming for. And the daily will give us early signal that the market is, the weekly is coming for a reversal. So we want to ensure that price still within this range. So the next, what are the possible levels that price have high probability of return from our supply level? So what we can do here, we can see map our supply zone from this point. So from the daily time frame, what we want to do here is we want to map, this is one supply zone. Now mind you, sometimes there can be a shift in market structure that cannot hold. So there is still obvious. We have this level here. Let's focus on what's most significant here. We still have this level here. Hold on. So our major focus is here, which this zone, which is below our trading range altogether. So there are a lot of people who use several technical tools to map at their entry retracement level. Can use trend line, Fibonacci. So our focus now, the next thing we want to do now, from the weekly time, from the daily time frame, what we want to figure out here is our trading range. Once we go to point our trading range, if there's chances for us to pinpoint our zone, we can map out zone. But what we want to do here is our actual zone is mapped out from the daily time frame, from the 4 hours. So the next thing we want to do here is to go closer to the 4 hour. We want to scale down to the 4 hour to clearly map our zone. Let's go to the 4 hour. All right. Once you're on the 4 hour time, what we want to do here is to refine those daily demand supply zone that we mapped out, if they are still valid there. So what we can refine this first zone. So this is our, now if we come to the weekly, this is our, this was the origin of the daily trend. So as we come to the weekly, I said structure varies from time. So what we want to focus here is the daily range. That should be our focus. The other structure here, but we can focus, for the sake of simplicity, we want to focus on our trading range. So this was the high that led to this break of structure. After this break, we had a pullback. This was the high that led to the break of structure. So what do we expect after a break of structure? What do we expect? Now we had a break of structure here. We had this high that led to the break of, what do we expect? Which this price not really push up significantly. Stop around them. So once we had this high, what do we have? We had a break of structure. Once we had a break of structure, what do we expect? We expect a pullback to the level of supply. So let's see. Let's refine this zone. So if you closely examine the structures here, what we are, this is a supply zone. You can see when price tap into the level. Once price tap into the level, we had this aggressive push from this zone. Now what you can see here now, once you had a tap to this supply zone, what do we expect? bear with me. So what we have here, we have this high, we have this low, I take high, low, and this can be regarded as a liquidity. So we had a push to a level of supply. So what do we expect after a tap into a supply? What do we expect? We expect this to cause a break of structure to the downside. Now what we can see here is market is gradually building to the downside. Now as the market, we already know that the trend of the market is to the downside. As the market is gradually building to the downside, we can still look for other opportunity to re-enter the market for sale. So what you want to do here is you want to be very careful in re-entering of trade. This is the original entry point. This is the original supply zone we entered. So since we have entered our trade from here, we want to be scaling in, and as our scaling in, we need to be very careful. Now our mode of entering trade is buying from the level of supply. So what we have here is, what we can see here is, if you cannot place trade from here, from this forward, you can see, you not see a clear supply, you can push. Now this was a supply zone. You can place your trade here and expect the market to drop, which market did tap here, drop. So what I'm expecting from this market, from this analysis, or what I'm looking at for, let's scale down to the so this is our entry point. Hold on, let's go to the one now. So this is more like if you want to rescale into the market. So I want to quickly share without wasting much time here. Still, there's something I want to point out now. Once you have entered, this is the original tap into the zone. But once price tap, it drop, push up again, drop. Now if you want to find re-entry again, you can take from the level of supply zone. So I think when I analyze the market, price already pushed to this zone. This leg has already happened. Why this leg has also happened? But this is also a clear level for re-entry. Hold on. Close the map it as seeing price tap into the level. So that closely. Now, I made a mistake in this market and I still want to share it as also. One thing is always improving and also learning. So keep the energy going. So what I did was, once I came to the market, what I saw was the market has already tapped into this zone. The market was at least, so I saw this move that is already pushing down. So what I did was, since the market has already pushed from, normally I do place my trade from the base, like the origin of the supply zone, which is this level, but I failed to place an entry here. So I just want to get along and follow the continuation of the leg. So what I see here is we have this push here. Once we have this tap, we have this break of structure. And this break. So what I did, what was obvious to me was this supply level. So I marked this zone at. Then I was not really looking at I was not placing my trade from there. I was looking at from you can see from the, once you had this break here. So what I was expecting now, once we had this break, I was expecting to take continuation of the bearish move. So what I did, I placed an entry around this level. My entry was around this level. Hold on. Place my entry right about here. So the correction I want to really make here, what I want to point out here, that when I was placing trade there, I was like more of concern around this level that there's liquidity resting above this level. So because of the risk involved in the trade, and I still see how like the trade was still like more like enticing that okay, it's going to play out. Let me just but placing my stop loss all the way above this point here to somewhere around there was exposing me to more risks. So what I did was okay, since there's still liquidity, let me say shift my stop loss to somewhere around this level. So my stop loss was around this. What I was thinking, probably maybe price will spike, probably the stop around this level. So my stop loss was around here. So what I did, I placed my stop loss here. So unfortunately, the market break above, splash this level. Price stop me here, there, about here. So what I want to point out the correction here is the market flow in structure down as it's pushing down. We have this low, high, low, high, low. Now I place my trade now. Normally, if you are placing trade, you want to place trade and make sure that the stop loss clear the swing high. So what I failed to do was I was supposed to place my stop loss above this swing high for safety. So next time my stop loss should close above here. So now what I'm looking at now, what is currently happening now, we have this high here. Market has already break the structure to the downside. So what I'm looking at here currently in the market is looking at this supply level here, but so based on the mistake, once market is already in, this is a minor push here, a little bit, which is not occurring at the top. If it's occurring at the top here, stop loss will be here. Now here, my entry will be here. Try as much as possible to clear. The stop loss should clear the swing high. This was the origin of the push that led to this break of structure. So if my entry is going from here, my stop loss should try as much as possible to clear this swing high. So currently, this is what I'm really looking out for. I'm looking for a sell this market. I think here, but sorry, it's not a buy. It's sell and here. Stop loss should be, so depend on your risk, but depending on your risk tolerance, so your stop loss should stay, at least stay above here, and your TP should, TP can come. Let me go to the 4 hour. TP can come around this level. So that's what I'm looking at first. Let me briefly share with you. It's not about the trade I placed, but what I want to, the most important thing here is what's most important here is the analysis. It's not about the entry. I just want to briefly share with you my trade here. That's why, if not, what's most important here is the analysis, not the trade or this current trade. Thank you very much for your time.